Hello, and welcome to another edition of Property Line Today. My name's Curtis Mangus, and I'll be your host for today's show. With us today as co-host, we have Tammy McHugh. Welcome, Tammy.
Thank you.
Tammy's an active CPA. She also has her broker's license, current owner of Heritage Real Estate, and I understand that you just recently received your master's degree in real estate.
I did, in May.
Good. Congratulations and welcome.
Thank you very much.
Today we're going to talk about the most misunderstood and underutilized mortgage loan program that there is today, which is the government's home equity conversion mortgage, also known as a reverse mortgage. I believe there's more confusion and more misinformation about this loan product than all other mortgage loan products combined. So today we're going to dispel the rumors, and we're going to explain the facts and the benefits about this important government program and what it has to offer for both retirement and financial planning. And if you have any questions about today's show, you can of course go to the Property Line website, or I can be found at thelendingspot.com. A recent AARP study of 1,500 retirees who took out a reverse mortgage, it said that 93% of those people, it had a positive impact on their lives. I think that's a very, very important statistic to remember when we're talking to people. And Tammy, if you would, in a few minutes, I'd like you to explain as a financial planner and as a real estate agent what you see are the advantages and the benefits of this government program.
Absolutely, Curtis. As a real estate broker and CPA, I am often the first point of contact when someone needs to do something different with their housing situation. The family will call me, I'll come and meet with them, and we'll sit down and discuss what their needs are. One of the things I have to do is to figure out what the value of that home is and how much they owe and if they have any equity. And if I determine that they have equity in that home, often my suggestion to the family is maybe they should consider keeping the home, because often they don't know that they have an opportunity to do that. Sometimes when they call me because they're in financial distress. They need money. Sometimes they've discovered that the house that they're in no longer meets their needs. Maybe they're in a two-story home and they need to get a single-story home. Maybe they're concerned that they may never be able to retire because their cash flow won't support the mortgage payment that they have right now, and they're afraid. And sometimes the best thing I can do for them is to recommend that they speak to a loan officer about a reverse mortgage, because it may offer the solution without having to sell their home.
And it's also because it's such an unusual product and it's not very well known. Very often people don't even realize the benefits and what's available as it being a reverse mortgage.
Oh, absolutely. I come across it all the time, and people simply don't understand the benefits. They believe it's too good to be true. Sometimes they've never even heard of it, but sometimes they truly don't understand it. And if they did, it could help them.
Very good. So what we're going to do today, we're going to go through all of the different aspects of the reverse mortgage. The first thing I'd like to go through is what the common myths and misconceptions are about a reverse mortgage, because there's so many of them out there. One of the most prevalent that we see, that people think that for some reason the government owns their home, which is absolutely not true. A reverse mortgage is just like any other mortgage. The borrower stays on title, they own the home, there's a mortgage or a lien put on the property, but in no way does the government take title or own the house in any other way other than any other mortgage loan that's taken out. Another big misconception that people think is that for some reason they're giving up all their equity in the home, which isn't true. It's just like any other loan. Typically, the loan is going to loan about 50% of the value of the house. That other 50% is the borrowers to do with as they wish. If they want to sell the property soon and take that equity back, if they want to pay off the loan, all that equity is still theirs, and they can do what they want with the property just like any other loan. An important thing to remember that is not very well known on a reverse mortgage that is different from a regular loan is that it's called a non-recourse loan. What that means is the only recourse that the lender has to pay off their loan is to sell the property. Their heirs are not obligated, the children are not obligated, they can't go after the estate, they can't go after other assets. The only remedy that the lender has to pay off the mortgage is to sell the property. The estate always has the option of paying off the loan and keeping the property, and the heirs always have the option, if they want, of buying the property first. And so those are probably the most common misconceptions that we see out there about this loan. It also, on a refinance, if they're taking loan proceeds in any way, it doesn't affect Social Security, it doesn't affect Medicare, it doesn't affect any of those programs typically because they're loan proceeds, and loan proceeds aren't taxable, and typically that doesn't cause people a problem. Tammy, what are the most common misconceptions that you see with a reverse mortgage?
I often have objections that are brought up from people because they don't understand. For example, if I bring up a reverse mortgage as an option for someone to be able to keep their home and stay in their home and age in place, oftentimes the family will bring up something, for example, they've worked hard their whole life to pay off their mortgage and they finally have their home paid off. And if they mortgage it, then they will not be able to give their kids anything. They don't understand that what they're doing is they're improving their lifestyle and they still have the house and they can still give it to their kids. And in most situations, the kids want the parents to be as comfortable as possible during their retirement years. But what they don't understand is that it doesn't adversely affect transferring the asset to their kids later on, because the home still appreciates in value. And even if there's a reverse mortgage on it, the kids are still going to have equity. And they often will have the misconception that the kids are going to have a debt to have to pay back, that they don't want to burden their children with a debt that they took on during their life. And they don't understand that is not the case. The children do not have to pay the debt back. They sell the home, pay off the mortgage, and they still get the proceeds.
Sure, and if there are other assets in the estate, they can just pay off the reverse mortgage and keep the property. Very often children want to keep the family home. They may want to move into it, and all of those options are available to them.
Absolutely.
Because the parents are still on title, and then it will go ahead and convey to the estate, and it's handled just like any other loan as far as going through the estate and the probate process. So the children don't have to worry about that being a burden to them. And of course, everybody wants their home paid off in retirement. And if they've done that, great. But if they are short on money, either as a monthly income, or they have unforeseen medical expenses, or any of those reasons, typically the biggest asset that people have is their home. The advantage of a reverse mortgage is they can use some of the equity in that home, and it's not a burden to them financially because there aren't any payments to be made on it.
Correct. That is what people fail to understand, is that it's possible to take out a loan and to not have a payment.
And people, in the retirement age, they've borrowed money for 50 or 60 years, and everybody is used to the idea of taking out a loan and paying it back. And this is the only loan in existence that you can borrow and is not expected to be paid back in your lifetime. And that's a fairly difficult concept for people to grasp and understand, but that's why the government has developed this program, is so people can stay in their home and they can use that financial asset to benefit them, either in the way of a monthly income if they're on a fixed income Social Security and having trouble making ends meet, having trouble with medical bills. There are a myriad of uses on why this loan can be used, and the government has no control and no requirements on how that money is dispersed or used. So the owner of the property can take out a reverse mortgage and they can use that money for any use that they want, fun or not so fun, including buying motorhomes and traveling, buying investment property, gifts to fund their grandkids' education. There are a myriad of uses on why this can be used, especially medical bills, assisted living, some of those things that aren't quite so fun, but are very necessary. And people realize that they have this large asset, but all they can think of is, I can't afford a monthly payment, so I have to sell the home.
Correct.
And which is not true with this particular product. One of the most important things that people need to realize with this home equity conversion mortgage, also known as a reverse mortgage, is that before the loan process really even starts, the government has required counseling that all the borrowers have to go through. And the reason that this counseling is required is so that the borrowers understand exactly what their options are, exactly what the loan is, what the requirements are, and what the expectations are. And it's the only loan out there that requires counseling up front. And I think it's a very nice thing to be able to do because, for one, nobody can say nobody understood how the loan worked Another nice thing is it also protects the government because nobody can come back and say that the borrower wasn't fully informed on how the loan worked. The loan can be used to purchase real estate as well as a refinance. We're going to talk about the refinance options first. The loan criteria on a reverse mortgage is pretty straightforward. You have to be 62 years of age, and you have to have at least 50% equity in your home. And that's a rule of thumb on the equity position. As you get older, the position improves a little bit, but as a rule of thumb, roughly you have to have at least 50% equity in your home. And at this point in time, on these loans, the lender doesn't check credit, they're not looking at income, because the loan doesn't have to be paid back. There aren't any payments, so the borrower doesn't have to qualify. Now, the government is talking about making some changes, but right now, there aren't even credit and income qualifications on a reverse mortgage. All is it required is that on a refinance, you're 62 years of age and you have at least 50% equity or more. Or on a purchase, if you want to buy a house, that you can put 50% down at the age of 62. And the nice advantage on a purchase is that then you never have to make a payment. When is the loan due? There's also a lot of misconceptions on when this loan is due. And the requirements are fairly straightforward. When the last borrower is deceased, that is when the loan becomes due and payable. And it's not due and payable immediately. Typically, the lender will allow at least 6 months for the estate to figure out, do they want to sell the house, do they want to take other assets and pay it off, that kind of thing. So that is typically when the note comes due, is when the last borrowers are deceased. Also, if the borrowers are no longer living in the property, they moved into assisted living or made other arrangements, at that point in time also the loan becomes due and payable, and typically within 6 to 12 months, say they want the home sold or they want the loan paid off. And finally, if for some reason the property taxes and the homeowner's insurance aren't being paid, that would be the other reason that the lender would call the note due, is because their collateral would be at risk. But keep in mind on this loan, which is different from any other loan, there aren't any payments that you have to make. We're going to talk about a refinance first, and there's a number of different ways on a refinance that this loan can benefit a client. First of all, and one of the most common, is just to pay off their existing loan. They may have purchased this house and paid it down and had every intention of paying it off, but for whatever reason, they may have got to at least half of the value or further, but they just haven't quite gotten there for whatever reason with being able to pay off the mortgage. And so the nice thing about a reverse mortgage is you can take one of those out and it will eliminate that mortgage payment, which at that point in time, very often people may be able to retire or will certainly ease that financial burden. Another very nice aspect of this loan, if your house is paid off or you have quite a bit of equity in it, you can take an income stream on it for life. And so you've worked hard to pay that property off, and it's great that you've paid that off, but that property is not producing you any income on a monthly basis. And so if you're on a fixed income on Social Security or retirement and you're struggling to make ends meet, often this loan can provide $400, $500, $600 a month in monthly income for your life. And it varies because it's a table based on the age of the borrower and the value of the property. And based on those two factors, there's a figure that is figured on how much that monthly payment is going to be. One of the best features is if your property is paid off or close to it, you can just take a line of credit out on the property. The advantage of a line of credit is you can take that out and have it there available to you for when you need it, for whatever those options may be, such as medical bills, large unforeseen expenses, or you can draw on it monthly out of that line of credit as you want. And so often you can use it as a debt consolidation, pay off your existing mortgage and other debts, take care of large expenses, or just set it aside so that you have that cushion available when in the future you think you're going to need it. And one of the most unique aspects of a reverse mortgage line of credit is that if you set up that line of credit and don't draw on it, the line of credit actually grows based on what the interest rate is. And so if you set up a $100,000 line of credit and it's at 5%, after a year, your $100,000 line of credit has turned into $105,000. At the end of 2 years, $110,000. And so your line of credit will actually grow over time. So it's a very nice financial planning tool to plan into the future, even if you don't need the money now and you're thinking at some point down the line you might. You can set up that line of credit, you can let it sit and let it grow, and if 5 or 10 years from now you need that money, you can borrow on it, but it's growing into the future. And if you never need the money, you don't need to borrow on it, and your home is still basically paid off and free and clear. I consider the refinance side of things to be a great financial planning tool as a way to both avoid catastrophes and also in a number of different ways to be able to improve your retirement. Tammy, would you share a few examples that you've run across to where this loan has either helped or could have helped people that you met?
Absolutely, Curtis. I honestly have had many situations recently where I've had conversations with the clients where a reverse mortgage either is a great opportunity now, or I wish I had known them at a time I could have recommended it because it could have made a significant difference for them. For example, one of the examples, I received a call recently from a gentleman who had inherited a home. His mom had passed away. She, at the time she got sick, had a fair amount of assets, and the assets were used to pay her medical bills while she was ill. At the end, she passed away, and the son inherited the home, and he called me, and he didn't know what to do. He said, I need to sell the home. And I said, are you sure you don't want to live in the home? And he said, well, I think I need to sell it. But what he didn't know was that what I told him right away was, what if you consider doing a reverse mortgage on this home? And you moved into the home, and you lived in it, and you made it your home. I said, your mom has given you a tremendous gift. She's given you the gift of a home with no mortgage payment for the rest of your life. And this is a gentleman who struggles financially. And he could potentially draw income from the home to supplement his income because the home is paid off and not have a payment for the rest of his life. It really is a gift that he had no idea how vast a gift it was for his mom to give him a home in her will that was paid off. It's an amazing gift. Another option is somebody I wish I had known sooner, a gentleman who is approaching 80 years old. He's still working outside in the heat because he can't pay his utilities. A few years ago, about 5 years ago, his house was paid off. His wife got sick, and he ended up having to mortgage his house to pay the medical bills. At the time, they weren't really stressed about it because they both were receiving income from Social Security and they could make ends meet. What they didn't think about was what happened when the wife passed away. When the wife passed away, his income was reduced in half. Now he couldn't make the payments, and the home slowly fell into disrepair, and he had no ability to be able to do those repairs. And during that period of time, he literally got further and further behind on his bills, on everything, and now he's facing a short sale on a home that he's owned over 50 years. It's heartbreaking.
It is, and in this case, if they'd have known up front
Yes.
that they could have taken out a reverse mortgage, they could have taken it out joint, could have taken care of their financial issues at the time, had no payments, and then unfortunately she passed away, but even though she passed away and that loan was still there aren't any payments on it, and so he could have still lived there, he wouldn't have to work, and he wouldn't now have to sell the house on a short sale.
That's correct. His whole life would be different. I honestly believe he would be in better health because his stress would be reduced. His cash flow would be better. And the family wouldn't be faced with having to move him out of a home that has been his home for over 50 years. And in this situation, this poor gentleman is feeling as though he's somehow a failure because he had the home paid off at one time. Had I known him then, I would have absolutely recommended this because it would have made his life very different, and it would have helped him preserve his dignity in a much bigger way. He would still be there today.
And I guess my input would that be is if you know of any seniors that are struggling financially, their home is paid off or they have a lot of equity in it, very often this loan can cure many of the issues that they have, either struggling to make the mortgage payment or because of medical bills, trying to get those paid and trying to figure out on a fixed income, how to be able to make ends meet. Very often, that's what this loan can do. And be quite frankly, that's what this loan is designed to do. That's why you have to be 62. I wished I could take one out now, but unfortunately, it just doesn't work that way. You have to be of retirement age to be able to qualify for this loan, because the idea is it's supposed to be able to help you out financially in retirement and keep you in your home and be able to take care of those financial issues as they come up.
Absolutely correct. And there are many other examples. Another one is a woman who owns a home. She worked very hard to pay off her home, and she needs to move. She needs to move to a different place due to a different housing need. And the concern is, if she sells her home, is she limited to buying what the proceeds of her home will allow? And so we've discussed obtaining a reverse mortgage because it allows her to buy a better home and still not have a payment. Fighting the misconceptions again of, I want to leave something for my kids, and we're working on that. But the truth is that with somebody on limited income, sometimes the ability to obtain a new loan is impossible. But when you have equity in your home, this is absolutely designed to help that type of an individual. Another example, which is one that makes me happy every time I think about it, is a gentleman who, his mom had passed away, and he was handicapped, and he needed a caregiver. His mom passed away and left him the house, but there was a mortgage on the house. It was a small mortgage, there was equity, but this gentleman couldn't qualify to be able to pay the mortgage payments with his disability income, and the house went into foreclosure. It was suggested to him to consider a reverse mortgage, and in that scenario, he was able to get a reverse mortgage, and he's going to be able to live in that home that he grew up in for the rest of his life, and he's going to be able to have the caregiver come to the home, and he will not be displaced. This is an individual who had extremely limited options and ended up in a much better situation, and thankfully, because his mom had given him the gift of the home.
Notice in the last two scenarios, there's kind of a theme or a trend here to where it's eliminated debts. They don't have to make a payment. Literally on a purchase, like what you mentioned in the first scenario, somebody could buy a home at 62 years of age, put 50% down, and live in that home until you're at least 100 or longer, as long as you live. The note isn't due until you pass away. And so stop and think about buying a home, putting 50% down instead of paying cash, and living in that home for the next 30 to 40 years. And very often these people are on a fixed income, retirement income is fairly low, and they can't afford a mortgage. And unfortunately, being a lender, one of my problems is very often seniors, unfortunately, they don't qualify. Right now, lending standards are so tight that somebody on just Social Security, especially with the way prices have come up recently, they can't qualify for enough house to be able to buy anything.
Exactly.
And so it's a great way for people to be able to leverage their money. And it's just like paying cash. You don't have a payment, and they can buy much more house, and they don't have to worry about making a payment. All they have to worry about paying is their property taxes and their homeowner's insurance. Any other scenarios?
Absolutely. It's a purchase scenario. And would this be an appropriate time?
Sure.
Okay.
Sure.
I met recently with a person who their home is in a state where it needs repairs, but it's paid off. And this individual really needs another home, but doesn't believe they can afford one. However, what they don't understand is that they can buy, for example, selling a home for $100,000. The proceeds that will net from the sale of a home at $100,000 won't buy a home that would improve the financial situation for this woman. However, what if she bought a home for $200,000 and she put down half? She's still not going to have a payment, and that was the goal all along, to be able to pay off the mortgage and not have a payment. But with a reverse mortgage, you don't have a payment. You just put 50% down. So whether for this individual or for someone who really hopes to improve the situation for themselves or for a family member, sometimes the thought is you can get a much better house by putting 50% down and have a reverse mortgage with no payment and achieve the same thing of not having a payment.
What a great way to leverage your cash.
Absolutely.
Let's use the number of a $200,000 house. And these people are fortunate through the sale of an asset, another property, retirement, that they have enough money to pay cash. Well, even if they did pay cash, sure, they could put $200,000 down and never make a payment, but they've lost the use of that money. Whereas they could do a reverse mortgage, put half down, they still have $100,000 left, and there's a number of uses that they could use that money as far as an income stream, such as an annuity, buying an investment property, other investments that would develop an income stream for them that they wouldn't have if they paid cash. If nothing else, it helps keep them liquid. And one of my favorite sayings is, there's nothing better than money in the bank. And so something to keep in mind is, even if you can pay cash for a house, should you? I guess they could always pay cash and come back and take out a reverse mortgage later. But the nice thing about a reverse mortgage now is you don't have to credit and income qualify. And so there's often seniors out there, they're asset rich, but monthly income poor. And they may not qualify for a home loan right now.
I have that happen a lot. And that very scenario is one that I recently was speaking to a client about. They were in a situation where they couldn't qualify. They tried to their credit was fine, but the income was so low they couldn't obtain any kind of a mortgage. However, the conversation came in, how much equity will you have? How much cash would you have to purchase? And having the ability to know that you don't have to use all your cash, that you would be able to save some back and be able to have a safety net for emergencies. I often see people who take every nickel they have and they put it into their next home, where they wouldn't necessarily have to. They wouldn't need to do that to be able to buy the home. And so I absolutely agree that this is an option to be able to keep liquidity available for homeowners.
And what a great investment strategy if, instead of paying cash for that $200,000, just to have that $100,000 available, even for its emergencies, medical bills, that kind of thing. At least it's liquid and available if you choose not to use it for some kind of a monthly income stream.
Correct. Just last week I met with someone who wanted to be able to use the equity using a reverse mortgage to be able to buy investment property, because they wanted to increase their income, and they knew that making the mortgage payments on the house they have a very small mortgage, they weren't accomplishing increasing their cash flow at all. And so we had the conversation about, if they obtained a reverse mortgage, they no longer had any housing payments, they could draw some of the cash and be able to buy investment property that would create income. So not only did their housing payment go away, but they created an income stream as well.
Were they receptive to that?
Very much so.
All right. So there's a case where they actually win on both ends.
Absolutely.
They've eliminated their current mortgage payment. They were probably down to the end, but unfortunately with a mortgage payment, it doesn't matter. Even if you've got 1, 2, 5 years left on your mortgage, you've still got to make that payment every month clear to the end. The nice thing about a reverse mortgage is you get instant gratification. You've eliminated the mortgage payment, and then you can set it up on a line of credit so that if you want to buy investment property or any kind of investments or an investment stream of some sort, you have that money available now. So not only did they eliminate the payment, they've also are going to generate an income stream. So they actually, in that case, got the best of both worlds.
I recently had a conversation with a family too, who met with me because they were talking about wanting to downsize, because they thought that was the only option they had to be able to retire. And the retirement is maybe in 7 years or so. And so they were talking about what options they would have to be able to end up in a home that they felt they could afford when it came time to retire. And the first thing we talked about was, maybe the option isn't to buy a smaller house. Maybe the option is to try and accelerate the mortgage that you have to get to 50% equity by the time you want to at age 62, so that you can then take out a reverse mortgage, eliminate your payment, stay in your home and never make a payment, because that is what was keeping them from retiring, was the mortgage payment.
What a great thing. Even though you can't take out a reverse mortgage in your 50s right now, what a great financial planning tool, so that when you turn 62, you can make sure that you're at 50% equity so that you can do a reverse mortgage. I have a client I helped last year. He was in his 50s, downsizing, children had left, had some equity in his home, and he said, "Curtis, I'll buy this house, I'm going to put it on a 30-year loan, but I want to retire in 7 to 10 years. I'll never pay this house off in time." how am I going to do this? And he was in a quandary about financially how to be able to retire when he still had a mortgage. Well, the financial plan that we put together was, instead of putting it on a 30-year loan, we put it on a 20-year loan. And he was 55. And so in 7 years, what was going to happen was, based on 4% appreciation in the valley, which is a reasonable expectation based on history, based on the value of the house going up 4% a year, and him paying the balance down on a 20-year loan instead of 30, in 7 years, when he was at age 62, he was going to be at 50%. And at that point in time, he'll be able to do a reverse mortgage, he'll be able to pay it off, and he ends up the same place as he would as if it was paid off, which is, he doesn't have a mortgage payment any longer. He'll be 62, and he could potentially live in that house for another 30 or 40 years and never make a payment. So you don't have to be 62 in order to start using this product, as far as being able to use it as a plan. And the key when you're in a financial plan, you need time. Okay, time is your friend as long as you're ahead. And if you're at 62 starting to do that, it's too late. And so anybody that's in their 50s and they're thinking about buying a property and wondering how they're going to be able to get it paid off so they can retire, what a great option. Especially if when you buy it, you run the numbers, figure the factors, and so that you've got a plan in place that at 62, 65, whatever that age will be, based on a normal appreciation rate, you'll be at 50%, and you'll be able to do that loan, and you'll be able to retire and not have to struggle with a mortgage payment on a fixed income.
It honestly should be considered in everyone's financial planning. As people are planning for retirement, basically the housing payment is one of the biggest things that will slow people down in retiring.
The biggest.
It's cash flow.
It's the biggest.
Right.
What's bigger? What payment's bigger than your mortgage payment?
It always is the largest.
It's always the largest. It's always the one that you have to overcome. What's this, in my opinion, the single biggest aspect, the single biggest hurdle people have to retirement is eliminating that mortgage payment. If you're fortunate enough at 62 to be able to have it paid off, great. Well, then we'll talk about doing a refinance later. But if you're not, anybody in my opinion, that's age 50 or older, that hopes to retire between 62 or 65, if financially they don't think they're going to be able to have that house paid off by the time they want to retire, they need to understand the benefits of a reverse mortgage. They need to understand how it works so that it can be a permanent part of their financial plan.
I absolutely agree, because retirement is what we're all striving to do. Like the gentleman I talked about earlier, who is nearly 80 and still working, we're trying to avoid that situation. And by eliminating the housing payment, most people will be in a much better situation for retirement.
I don't know how else you can eliminate a housing payment. You know, other than having the house paid off, I don't know of any other option. I don't think the lottery is a very good idea. I don't think that it's going to improve your odds very much. I would much rather have a plan in place. And a reverse mortgage has been around for 25 years. It's not a new program. It's not a new product. People think that this is something brand new. The purchase side of things has been around for over 7 years. But on a refinance side, the different options have been available for 25 years now. People just don't know about the program, or they don't understand how it works. And it can be a huge financial benefit for them if they understand the mechanics, which unfortunately there just seems to be not a lot of that out there right now, which is of course what you and I are trying to take care of today.
Absolutely. And I feel it's important for me as a real estate broker and also as a CPA that I'm aware of what options there are for my clients, because in good conscience, many times my recommendation to someone is, wouldn't you rather stay in your home if you had an option to? Or wouldn't you rather buy a home that will better fit your needs and have the ability to not make a payment on this? Sometimes the lack of information is what's hurting people the most. And this loan program has received a bad reputation over the years because people honestly don't believe. They think that it's too good to be true, but it really is an incredible tool when utilized and understood.
It's an excellent government loan. I think, in my opinion, it may be the best government loan there is. I can assure you it's the only government loan that you don't have to pay back in your lifetime. And so understanding how it works as far as being able to develop an income stream, being able to take a lump sum and pay off your current mortgage, being able to borrow money against your home in order to buy investment property, in order to help fund your kids or grandkids' college education, to use it as a gift. All of these things are available under this program, and it is so underutilized. And so what we're trying to do today is raise people's awareness enough that they can understand that if you're 62 or older currently, and you have 50% equity or more in your property, this is at least something that you need to consider and you need to research. And even if now isn't the right time, it's something that as a part of your financial plan and your financial strategy could make a huge difference in your retirement and how you retire. And as we mentioned, if you're in your 50s, you need to understand how this program works just so you may be able to retire. Because unfortunately, the single biggest burden that a person has when they're trying to retire is usually eliminating the mortgage payment.
I think it's really important. There are so many people who are living in a home that may need repairs. They've paid it off, they've worked hard all their lives, and maybe the house no longer fits their needs. And to have the ability to either do a reverse mortgage to improve the home so that and stay in it, or to use the equity to be able to buy another home, a second home, for example, or a timeshare, or to go on a trip around the world. You can do all kinds of wonderful things with this to improve your life. But the option, people aren't trapped in their home. Oftentimes I hear people say, I could never qualify for a mortgage, and so all I have is this house and I need to hang on to it because I don't have any options. And they do. They have a lot of options. And I think if people really want to change their housing situation and they have equity, they need to understand. They need to take the time to speak to someone like you who can explain that they have lots of options to be able to either improve their home and stay in it, sell it, and be able to use a reverse mortgage to buy another home that would better fit their needs. They have so many options, and the lack of information, truly, I believe, is what we're fighting.
And I really think it's important that you try and talk to somebody local. I think the face-to-face interaction is very important, especially for seniors. And also, anybody who has met with a lender initially and has any interest at all, I would really recommend that they go through the government counseling. The government counseling is very thorough. It's a very consistent protocol. It goes through all of the ins and outs of the loan. And I've had people say that they're very impressed and that it's been very thorough, and it's helped them a great deal to understand how this product works and how it can relate to them. And it may not be the right product for them at a particular time, or maybe not ever, but it's something that certainly needs to be considered for most retirees. And I would guess that 80 to 90% of the retirees out there or more don't even know that it's an option for them.
Oh, I agree. As I meet with people on a daily basis, and I bring it up, it's really common for people not to have any understanding about it. If they've ever even heard of it, they usually have heard something word of mouth, and it's a negative connotation. And that is what we're trying to improve, is to increase the information and to let people know they have options.
And so if you have any interest in a home equity conversion mortgage or a reverse mortgage, I would really encourage you to pursue the education on it so that you're better informed. I'm surprised how many real estate agents aren't aware of how the product works, even on a purchase. And I teach real estate classes to agents, and you were to one of my classes, and we had a very fun class that time. And there were, I think, 24 agents in that particular class, and I believe there were 2 that had any idea how they worked, which you were one of the 2 agents involved. And so if you've got professionals in the real estate, business out there who aren't even understanding how it works, most agents have no idea how it works on a purchase. Most agents don't even know you can do a reverse mortgage on a purchase. And so it's it's an interesting product. I am still surprised almost every day at agents not realizing how this can work for their clients. I've got clients right now, they're going to sell their home here in the Valley. It's paid off, but it no longer suits their needs in retirement, and they're going to sell it. And for unfortunate credit and financial reasons, they don't qualify for a regular loan. but they can sell their property and buy another property, put 50% down on a reverse mortgage, and they don't have to worry about it. And so I don't necessarily always encourage people to sidestep a regular loan, but in this case, if you can't qualify for a regular loan, because unfortunately right now, in my opinion, the lending standards are probably the tightest they've been in my 30 years. And so if you can use a reverse mortgage and you don't have to worry about credit and income qualifying, very often I don't know why you wouldn't do that.
I recently came across a family that honestly, they had a property out of state that they had invested in, and the market in that area went bad, and they needed to do a short sale on it. But they also own their home here, and they were in a situation, and that was the first conversation we had, was maybe you should do a reverse mortgage on your home and be able to not have a payment here. And they said, but we had a short sale, you know, or we had a foreclosure, or we had a bankruptcy. It's like, you don't have to income or credit. It doesn't matter. And that's hard for people to understand. But in this scenario, they were ideal candidates to be able to restructure their, be able to get a reverse mortgage on their home, create an income stream for themselves, and not have to make a payment. And because they couldn't qualify for a normal conforming loan, they just honestly didn't believe it was an option. And also, I have to comment, because it was really funny. The class that you taught on when this came up, the whole room was full of real estate agents and brokers. And it's amazing how the lack of understanding, even among real estate professionals, who should be able to provide at least some information to their clients, because again, we often are the first point of contact that people will call.
Most often.
Very often. But in that scenario, in the class, how many times was it brought up again, over and over and over again? People would say, but when does it have to be paid back? And why do my kids have to pay it back? And it's like, you answered the question over and over and over, and they still didn't get it.
And folks, it is a hard concept, all right? It's the only loan I know of, any loan, that you can take that loan out with no expectation of paying it back in your lifetime. And let me give you an example. If you walked into your banker and you said, I want to purchase a home, I want to put 50% down, I'm 62 years of age, and I never want to pay you as long as I live. And when I die, the only recourse that you have to pay the loan back is to sell the property. What do you say? I don't like your chances. I don't think that's going to happen. And that's exactly what a reverse mortgage is. And the same thing is true on a refinance. If you went into your local bank and said, I want to borrow 50% of the value of my house, I want to put it on a line of credit, or I want to take it out in a lump sum, I want to spend it however I choose, when I choose, and I never want to pay you as long as I live. But you can just sell the house after I've passed away, and you can't go after my estate, you can't go after my heirs, you can't go after any other assets. All you can do is sell my property. I don't like your chances on that one either, Tammy.
Well, a good example of that was when our real estate market collapsed, and so many people were in a position of being underwater, having negative equity. The people who had reverse mortgages were the happiest people of all, because it didn't matter.
It didn't matter to them.
It didn't matter,
No,
because
it didn't make any difference.
Even if they moved out of the home and they owed $150,000 on a home that was worth $100,000, they just literally gave the house back to the bank, and nobody ended up paying the difference.
And it doesn't affect their credit.
Doesn't affect their credit.
And so under a worst case scenario, let's say you take out a reverse mortgage, and unfortunately we revisit 2008 and the market collapses. And unfortunately, based on the balance of the reverse mortgage and the value, that the property is now underwater again. And we hate it when that happens. But if it happens, the only thing the bank can do is sell the property. And they can't do that until the borrower has passed away or moved out. It's not like they can call the note due. They can't ever call the note due. The only reasons they can ever call a reverse mortgage due is, one, if they've turned 150, the note's due on its 150th birthday, or they've passed away, moved out of the property, or for some reason haven't paid the property taxes and the homeowner's insurance. And so have an open mind about this, because it's an unusual product that we really believe that most people need to explore. And just to summarize, in my opinion, kind of the highlights of what you need to know on a reverse mortgage that we hear so often that aren't true. And that is, first of all, that the family in the estate is never obligated to pay the loan back. Your children are never going to be obligated to make the payments or pay off the house or pay off the loan unless they want to. That's totally up to them. Also, if the home is sold and there's any equity in the property, it goes to the estate, it goes to the children, it doesn't go to the government. The government does not own your house. The government does not own your equity. It's your house still, just like on any other loan, to do what you please, but you don't even have to pay the loan. Remember that this is a government loan. It's a government insured loan. This isn't a fly-by-night lender. It's sponsored by the Federal Housing Administration, which is HUD. It's a standard loan. There's nothing unusual or fishy about it as far as who the lender is. The government owns the loan. It's a government-insured loan in the end. And so if you could understand just the basics of the program, you need to be 62 years of age and have 50% equity, either by putting in a down payment in a purchase or in just paying on a refinance, paying the loan down and appreciation over time. It is an excellent financial product to either generate income or reduce or eliminate debts. Tammy, I'd like to thank you for coming to the show today.
Thank you for having me.
Hopefully we've achieved our goal here of helping people better understand this important government program. To finish up our show on reverse mortgages, this is Sean Wolf. Sean, thank you for coming.
Thank you, Curtis.
Sean recently completed a reverse mortgage, and I wanted her to share her story of going through the process and how it changed her life and helped her out financially in her retirement.
It was amazing. Certainly I'd gotten a lot of bad reviews about doing a reverse mortgage, but quite the contrary for me. It was a wonderful experience. It helped me get out of some financial things that were not going to be cleared up too soon. And I knew that I had equity in that house. Discussed at length with my children if they felt that this was the right choice for me.
Of course.
And they concurred. I mean, this is a family home that I've been in with my parents as well. And it was a very smooth process. And I have to say, working through this, I learned a lot about reverse mortgages. And I have told many of my friends who said, "You're kidding me. You get to stay in your house the rest of your life and not make a payment. You could be gone on a vacation for 6 months and no worries, or you could sell the house later on and move and do another reverse mortgage should there be equity in it." There were many, many things that I found that were very wonderful for me. The money paid off some really hardcore things for me, I must say, and left me money to clean up a lot of credit things that I had. So I just have to say that it was a very good experience. The counseling was excellent. They're on your side, making sure that you ask the right questions from the folks that you're doing business with, and it was very, very good. I mean, I don't know what to tell you other than it was fabulous, and I can breathe. I can sleep at night, not worrying about, I get to go out and work in my yard and not have to worry about my bills and how I'm going to take care of this home. Can I pay for a roof? Can I pay for a lot of things around here that I'd like to do? And that reverse mortgage let me do that. Awesome.
If I remember right, when we closed your loan, you were so relieved to be out from under that mortgage payment.
Yes, I was.
It was a classic example. It's happened with many people that Sean didn't have the mortgage paid off, but certainly wanted it to be.
Oh, boy, did I ever.
And so we were able to eliminate the mortgage payment,
right.
Bring current or pay off any other outstanding bills that she had. And if I remember right, you even received a check.
I did.
A beautiful thing.
It was awesome. I mean, I felt like, wow, you know, now I can live life again, because I really had, you know, it was very stressful. And I'm not 62, I'm a little older than that, but it was something I didn't need It was like an albatross hanging around my neck, and the reverse mortgage just changed my whole life, my whole outlook on what I'm doing and how I'm living, and being able to enjoy my grandkids and not worry so much about that house payment that was hanging over my head constantly.
And so often what we hear that people are worried about is that I'm not leaving anything to my children, or how is this going to impact my children. It sounds like you had some very clear conversations with your children, and they were all for it.
Well, and they suggested that in counseling, and I think anyone that has children, of course, you're going to discuss that with them.
Of course.
They're all I have left in my life, and they said, Mom, we just want you to be okay. The house is yours. We probably won't be living there because they live elsewhere and they have their own lives. We want you to be where you want to be, for the remainder of your life. And if this is what you want to do, we're 100% behind it. And I've realized that they don't have to buy that house. They're not going to be left with that house. They're not going to be left with any debt.
No.
They have the option to buy the home, or they have the option not to. So it was a pretty clear-cut decision for me.
And for them.
Yes.
So they didn't have any objections.
Not at all.
And so once again, the children were involved in the decision.
Oh, yes.
Which we like. They approved.
Yes, it did.
It was a great way for you to stay in your home, eliminate the outstanding payments. Your retirement is going to be much better.
Yes, I'm sure you can tell by the lines are going way in my face.
Yes, you look much happier.
It's phenomenal. It's an awesome way to do what you need to do when you retire. Whether you take a lump sum or whether you're taking it monthly or whatever you're doing, I just think that we are, as retired people, are not utilizing what we have in our homes to make our lives better going forward.
Well, we're built to work our whole life to pay our house off.
Right.
Well, sometimes we don't make it
I know.
for whatever reason, and if not, what a great alternative to eliminate a mortgage payment so you can still enjoy retirement.
Totally.
Or if you do make it and it is paid off, how nice to be able to take some of that money that you paid to pay the house off. How nice to get some of that back.
Exactly.
Well, you can still use it either in a line of credit or in a monthly income, or however it may be. You worked hard for 30 or 40 years of your entire life to get that house paid down or paid off. How nice to be able to still see some of that money back.
Exactly.
And not have it be a burden because you don't have to make any payments on the loan.
And the wonderful thing is that there's no burden for my children. That's something I get to remain in the house I want to be in, and there isn't a burden to my children.
Isn't it nice to have the best of both worlds?
Yes, it is, and I have that.
You do have that. And who would have thought a loan would have done that?
No, I had no clue it was going to be like this, so I must say I'm 100%.
So your
people
kids
looking
are
at this.
happy?
Oh, yeah,
You're happy?
of course.
Everybody's happy.
Yes.
All right. And that's very nice. And that doesn't always happen on any loan. But in this case, it achieved the financial objectives that you
It was
wanted.
a perfect decision for me and what was going on. Perfect.
All right. And so, in conclusion, all we would ask is that if you're in your 50s and you may not be able to have your house paid off by the time you want to retire, I would certainly do some research on a reverse mortgage as part of your retirement and your financial planning.
Absolutely. I
If
concur.
you're 62 or older and currently own your home and you've got 50% equity or more, I would explore what the options are, either to pay off the existing mortgage or to put a line of credit on the house for a rainy day,
Yes.
or to use it as an income stream in your retirement, because no matter any of those options, there aren't any payments involved.
And there are options. That was the wonderful thing about doing this, was that there were several options, and I thought it was amazing.
Yes, and so keep in mind line of credit, monthly income, lump sum, or a combination of.
Yes.
You can actually pay off an existing mortgage, and if you have the equity, put a line of credit on it or an income stream. And so it's not exclusive. You can actually do a combination of those as well, depending on what the equity position and your circumstances are. You can literally tailor each loan to a person's individual financial needs.
Right.
Would you agree?
Oh, absolutely.
All right. And you thought the counseling was well done?
I thought it was wonderful. I mean, it made it very clear about what was happening and what was going on. And I had questions for you afterwards, of course.
Yes, you did.
And it was wonderful, very detailed, and it made me realize this isn't what most people think it is.
No, it's
a
not.
good thing. It's not a bad thing.
It is a good thing, and the government counseling is very consistent.
It's
There's
very
a
key.
very specific protocol that the counselors have to follow through to make sure that everybody understands it and everybody is very well educated.
Right.
And so, in conclusion, we would just like you to consider a reverse mortgage and at least research the options for you as either part of your retirement planning, or if you want to retire or over the age of 62, you might be surprised financially what that can do for you and how it can improve your retirement, and your kids may be happy too.
Take a look at it. It's
All right.
amazing.
All right. Thank you, Sean. Appreciate you coming
Curtis.
today. If you have any other questions on a reverse mortgage, you can, of course, go to the Property Line website, or you can always find me at thelendingspot.com. Thank you for viewing. We'll see you soon.